Meanwhile, more on the Apple world this morning. KeyBanc downgrading Apple to sell, citing what it calls slowing iPhone builds with prices increases and the lower expectations for next year around Macs, iPads, and wearables. Nevertheless, Apple stock at a high, up about 15% year to date, pushing its market value close to $5 trillion. The other big headline, tech giant just sued OpenAI for alleged trade secret theft. Joining us right now is Walter Piecyk. He is LightShed Partners co-founder and partner. Good morning to you. When you think about Apple these days, $313, they will have higher prices for the next round of iPhones. That's true. The demand, though, for Mac Minis and everybody who wants to basically have their own server in their house has gone up, at least wildly thus far. I don't know if you think that's about to change, Walter.
I mean, I'm one of them. I've got my Mac Mini. Thankfully, I got it before the gigantic price increase that, Cook said was unavoidable. Obviously, the company generates a tremendous amount of free cash flow margin, so it might have been avoidable. It's unavoidable if you wanted to maintain those margins. But look, every year is a new year. There's some new issue that Apple, is dealing with. And, Tim Cook has done a phenomenal job at managing that. Some years he brings China in. The last couple of quarters, you may have had some pull forward. Remember, it wasn't long ago we had this tariff scare, and there was potentially pull forward that helped the revenue in some recent quarters. And obviously, China has been huge for them in the last 2 quarters. This is Cook's last quarter, right? This is his last earnings call that he'll be on. So now we're in this kind of transition phase, which doesn't seem to be getting a lot of attention. We're going to turn over to a new CEO. Yes, Cook will be an executive chairman. He'll still be involved, but really the day-to-day operations are going to be getting turned over to Turnus. So we're in a transition period here for Cook in a quarter now that is typically, I think, a little bit seasonally weak. If you talk to some of the operators, this is not a huge quarter. It's in advance of, the expectation of new products, including a foldable iPhone, which is, discussed at maybe a 2,000 plus price tag. So we'll have to see. Every year, again, is a new challenge. We're coming off a big, potentially pull forward couple of quarters. I think it's an interesting downgrade in the context of have maybe estimates gotten a little bit ahead of themselves for the next year or so.
Walter, here's the question, and maybe it's the Mac Mini question, or maybe it's the cloud question. In the world of AI, there's one argument to say that everything is going to happen in the cloud, should be more efficient in the cloud, should be cheaper in the cloud on one side. The other side says it's all going to move to the edge. It's all going to get processed on your phone. It'll be cheaper to process on your phone. It'll be cheaper to process on your Mac Mini inside your house, and that we're all going to want our own private servers wherever we are. Which is it?
It's a good question. We'll have to see how it plays out. There's a debate on, you also inject the open models aspect of this as well, right? Running an open model on your local, whether it's PC, phone, watch, or then ultimately device. I mean, up to this point, the open models, when they get good, convert to closed models, and they're looking for payment. Even in the, if you look at the etymology of OpenAI, it was theoretically supposed to be open Facebook. You look at some of the models in China, starting open and then maybe closing to get money. And then the question is, are those local models that you're referring to going to be good enough? The local models that I try to use on my Mac Mini are not, even close to being as good as Claude or as fast as Claude. Now, there's some management of cost that balances that, where maybe you say, okay, it's not good and it's not as good as Claude, but I don't need, the high value of Claude all the time, and I can do a lot of these tasks. Now, let's go take it to Apple and what you're referencing. Being able to use the information on my phone and having a local model on my phone to do things with my personal information, that's where Apple's pitch is going. Run it on my phone, use the access to iMessages that you, the user, will not want to, send into the cloud for analysis. And that's the type of, early benefits of AI that Apple thinks can drive more loyalty rather than less loyalty. If they're wrong and that local model isn't enough and people still want to go out to Gemini, still want to go out to Claude, that just puts them at risk. And then I'll take it one step further, Andrew. If you talk to Qualcomm, the guy who's helping a lot of the competitors to Apple design the 40 or so new designs where they want you to get to stop staring at your phone and interact with whatever Johnny Ive is developing for OpenAI, that local model on the edge may in fact reduce your usage of the phone, right? Because that analysis is occurring on devices that are off your phone.
Well, let's go there for a second, because on the screen right there, we say Apple files suit against OpenAI. Of course, it caused a lot of consternation, drama online and elsewhere, even with Elon Musk over the weekend and Sam Altman back and forth. What is your expectation that lawsuit will result in? Meaning, do you look at that and say, oh, goodness, OpenAI will, whatever they're building, whatever Johnny Ive is building, this has now been delayed a year, so Apple has bought itself a year or something like that? Or do you say, you know what, this whole market is so open and wide, and people are going to come up with all sorts of devices in the next year anyway?
I mean, you don't sue someone you're not worried about. And on the media side, when we meet with these smaller companies, the ones that are, potential, copyright violation, no one gets worried about sued if they're not going to have an impact. So obviously they're concerned about this impact. And again, going back to Qualcomm as a player in this market, there's companies that, help to enable some of these new devices. I think they realize that existential risk as we're going through this AI transition. Does it change how we all interact with our information? And obviously, they want to be the ones that give you the glasses or the AirPods or the pendant or whatever it is to interact with your information. And any way they can stall someone that might be a competitor to theirs, obviously, they're not beyond litigation. They've done this, right, in the past.
Most importantly, Walter, at $313 a share right now, would you buy it?
I mean, the PE multiples kind of at a peak. Does that matter anymore for some of these big names? It could be just kind of some of the rotation out of the more traditional AI names that are spending versus Apple that is not really spending in terms of CapEx on AI. I mentioned before, you're going into a softer quarter. There was probably pull forward in terms of some of the purchases in the March quarter. It seems like those 27 estimates, it's gonna hinge on how big is this foldable phone. I mean, Andrew, are you going to pay $2,500 yourself for a foldable phone? I'm going to get one just because I have to be able to talk about it. But like, how many people are going to spend that much for a foldable phone that hasn't been a huge hit when their competitors have come out with it first?
Is that a yes? Is that a yes? You'd buy it, or
no?
I'll tell you why I'm asking.
No, Joe, sorry if I wasn't clear.
No,
I would not.
I'll tell you why I'm asking. Because KeyBanc, we started the whole story with KeyBanc going to a sell with a $250 target. So they had a buy until October of 2023, 3 years ago. They went to a neutral because of valuation at $160, $170.
Yes.
So it's up 80% from where they went to a neutral and didn't like it. And now they're going to a sell with a $250 price tag. So take it for what it's worth. That's KeyBanc. If you want to listen to them, fine. Citigroup at the same time went to 365. They had a target of 315, I think, and they were right. And then they went to 365. So who were you, KeyBanc or Citigroup? The right answer is Citigroup.
I got out of. I mean, I used to have a sell. I got out of the way when during this whole AI hype, all along that time, I was like, look, Siri is still not good. AI is not happening, but people were still.
You had a sell for a while too?
In the past, I've had a neutral more recently, and I had a buy before that. I mean, I've been all across the spectrum, Joe, on this one.
Hard business.
So right now, look, you can't deny the strong position that they have in the market and their ability to succeed from AI. But you also can't deny that we're going through a major transition where AI, it offers a new opportunity in how you're going to get your information. It doesn't happen overnight. Clearly, that doesn't happen because they're years behind, and they certainly haven't lost share at all. But at some point, as you get to the stuff we were just talking about, the agentic, the stuff that you're going to use your phone less, can they play, a major role? The jury, I think, is still out. You have a new CEO. You've had a couple of quarters of digestion. I don't know if it's. I wouldn't say it's a short at this point, but certainly, given the run it's had.
If it gets to 365, it'll be a $5 trillion company, above $5 trillion.
I mean, I remember when everyone thought a trillion was hard to get through. Just these trillion numbers don't seem to matter in terms of caps on these stocks anymore, right?